some of my clients are like wanting the best deal, the lowest interest rate, like, and I'm always a little leery of that question because I think sometimes, like you were saying, that they may see these teaser rates and then once you uncover. So how do you know that you're getting the best deal? What things to look for?
Right. There's no real way to tell if you're getting the lowest interest rate.
Right.
Because interest rates move every day.
Yeah.
Sometimes more than twice a day. And interest rates are based on the bond market.
Mm-hmm.
So that's, in the financial markets, that's always changing.
Right.
And there's no way to predict what interest rates are going to do. So ultimately, as I had said earlier, lenders are going to all pretty much be competitive with each other when it comes right down to it. If you're talking to different lenders and you just kind of want to see what their rates are, if you go online, that's not necessarily going to be a representation.
Right.
Because if you're buying a condo, for instance, the interest rate is usually about 0.25% higher than if you were buying a single family or townhome. A lot of people don't realize that. They just look at the rate and say, oh, everybody gets that rate. But interest rates are customized to everybody's particular situation, meaning they're going to be customized to the amount of down payment, the type of home you're buying, and your credit score. That's going to be a big one. And also sometimes the loans are, they carry different interest rates, the type of loan versus conventional VA and FHA.
Right.
But ultimately, you don't pay your interest rate. You pay your rate. You pay your monthly payment.
Right.
So the way that a lender structures that with PMI, if you have PMI and things like that, is ultimately going to be the best deal.
Let's stop for a second because I know some people will know what PMI is, but some people won't. So can you just define PMI?
So PMI is private mortgage insurance, and that is anytime somebody makes less than a 20% down payment, that's when that comes into play.
Okay.
And I always tell people, it's an insurance that the lender requires that the buyer pays for on the lender's behalf. And it's just to offset the lender's risk.
Right.
It's not a bad thing because it does allow people who otherwise would not be able to buy a home to buy a home. And it's not a forever thing. Right. Depending on the loan program.
Right. So typically once you hit the 20% equity, then it goes away, correct?
Right. Mm-hmm.
And one other thing you mentioned about condos, that it's 0.25% higher. One of the other things I understand about purchasing a condo is that the investor ratio is something that can impact whether or not you're even eligible for a loan, right?
Well, that also depends. So it depends on the type of loan that you're getting.
Right.
So if you're buying a condo as a primary residence and you're buying it with a loan that Fannie Mae and Freddie Mac will guarantee, then you don't have to worry about the investor concentration ratio.
Right, okay.
If you're buying it as an investment property, you do have to be concerned with how high the investor, how many investors own in a particular condo. And then with the FHA loan, you also have to be wary of that. So again, just making sure that you're aligned with a good real estate agent and a lender who can give you all this information up front so that you are not surprised halfway into the process.
Yeah. When people are shopping these loans and rates and things, when do they actually lock the rate? I mean, when are they guaranteed that the rate that they see and you say, oh, this is what the rate is, when does it get locked and that's for certain what your rate will be?
True. The rate is locked once you have a ratified contract on a home.
Right.
So that's the first time you're eligible to lock in an interest rate.
Okay.
And everybody's always really worried, what if I lock in and the rates go down? Like nobody wants to have the rate go up, but they want to have it go down. With McLean Mortgage, just one little plug here, we do have a program called Rate Flex.
Okay.
That allows a one-time float down. Once you're locked in, you can float down to a lower rate if the market improves, and then up until the week before you're closing. Okay. So you have a window in which you're able to take advantage. And I've had multiple customers be able to take advantage of that over the years, and it's really been nice.
Yeah, that's
for
great.
them.